Hello, I'm Dr. Matthew Sim. How are you feeling today? I hope you are feeling fine. If you're a bit sad after COVID, you can plan a trip now. Right? This is a picture in Yangon, Myanmar, many years ago. The norm in life when investing is to think of volatility as risk, right? Especially when you invest in stocks and exchange traded fund. Personally, I do not think the volatility adequately represents risk, right? Because as long as you don't sell your stocks or exchange traded fund when they are down, you're okay, right? In fact, when the stocks goes down, and if you know or you think you know you have the right stocks or exchange traded fund, you should actually buy more. So in that sense, volatility is your friend. Okay, my proposal is to think of risk as an incident of total failure. Total failure means the stock turns to zero, lah, zero. You get nothing back, right? All right. So there are cases in my life where I bought stocks which turned to zero, lah, right? I don't want to name names because it's a bit sensitive, right? Okay, I name names. There's one called Rigmer's Trust. Right? In the end, I got zero from it, right? Then there are other stocks where, well, they're almost like penny stocks worth a few cents. It's not worth talking about, right? So to me, total failure is where you get nothing back, nothing, zilch, kaput, all right? So that's my proposal. So this total failure risk number, to me, is the probability that a stock or an exchange traded fund or any investments, real estate or otherwise, will turn to zero. Zero. Total failure, right? You don't get a cent back at all. Okay, the problem is that it's difficult to calculate the probability of total failure risk, right? Even if you come up with a number, there's no certainty that that is the number. Right? I'm sure there'll be many people arguing, many academics arguing about this in the future. But the difficulty is always determining the probability. I think the total failure risk number is better indicator of risk than volatility, right? Because it represents absolute loss. Volatility, when you think about it, can be your friend or your enemy. If you are brave and you make the right decision and calculation, you buy when it's low, right? You will benefit, right? Of course, if you calculate wrongly and you buy the wrong things, right, you're gonna lose a lot of money, lah. Right? So as you don't sell in volatile situations, you're not making a loss. Okay. Okay. Now we just need a potential Nobel Prize winner to determine the formula. I can't do it. I tell you outright, I can't do it. Probably need somebody with who is strong in mathematics, statistics, and at the same time has a deep experience in the stock market or any other investments. Okay, goodbye. I see you on my YouTube channel, HC Matthew Sim, or you can go to my WordPress uh, blog, HC Matthew Sim as well, or my Instagram, Dr. Sim 001, the numeric 001. With no spacings, DRSIM 001. I'll see you next time. Boom. Okay, please see my YouTube channel. You can just type HC Matthew Sim and you can see some of the videos. I focus mainly on retirement, investments for retirement. In life, we all want to retire with some form of dignity, all right? We don't want to be old and without money to feed ourselves, to house ourselves, and to pay for our medical bills for ourselves and our loved ones. So the aim is to be financially um, independent when we are old. Okay, thank you for watching. See you next time. I'm Dr. Matthew Sim, and boom.